Back with the 18-hour masterclass, and that's exactly what my colleague Nikunj promised you, right? Numbers and chart patterns. Who better than Atul Suri from Marathon Trends joining us right now to highlight exactly that. Atul, firstly, a very happy Diwali and welcome to the 18-hour masterclass.
Same to you. Same.
It's a challenge you've taken because all these people out here in our audience are waiting with their questions. But first, just an understanding of the market, Atul. Not everyone here is happy this Diwali, right? Because the retail guys are wondering, damn, I got in so late into this market. The FIIs are concerned about valuations. They're concerned about earnings. HNIs are wondering where the next stock idea is going to come in from. And traders like you, I'm sure, are wondering like, oh my God, 10,200, stay, right? So how durable is this rally looking to you?
So you're right that this move has been termed as the most hated bull market. The reasons are that, you are having a global bull market across the world. And I'll just sort of represent this with this chart. This is what we call the FTSE All World Index. It's a chart which sort of combines 49 global markets. This is the 2008 top, which is around 280. And you can see this kind of fall that happened in 2008. After that, the market has been slowly clawing up. We had some sort of false breakouts here. But what you really see in the last 1 year, in 2017, is a real kind of clean breakout. And it is having month on month positive. So world over, it's not just India, Aisha. It is world over that you're having a global bull market. If you look at the biggest component of this, the US, I mean, it's a dream run. Everyone thought post-Trump, life would end, US would unravel and things like that. But you've had a dream run in US markets. Look at Europe, a lot of political problems, a lot of economic problems. But look at something like Germany, the biggest driver in Europe. And that's another dream chart. You go next to Japan. I mean, Japan has been a perennial bear market example. Japan has just broken out into a 20-year high. You look at emerging markets, a country like Brazil, which was at a 52-week low about a year ago. Today is at lifetime high.
So we don't have to feel so cool about us. This is a global rally.
It's a global rally.
Taking all the ships
It's a global rally. In the emerging market space, if you look at the Chinese market, again, a total laggard. Something that really put a lot of weight on the emerging markets is also breaking out. So essentially, it's not just India. You are having a global equity bull run. And that is why what happens is that, we've been living in this last 7 to 8 years with this whole thing about this whole problem about quantitative easing. What happens when QE stops? What happens when the balance sheet starts getting regressing? What happens? But the market is surprising you. The market is saying something else. People think that the whole world would come to an end. You'll have a total financial crisis. Gold would be the only asset class to be in. But the story is turning out something different. And what I'm also seeing is that you're having sort of global economic revival slowly, what you call green shoots or early things. So if that comes in, I feel that this rally is more sustainable. I think that this index, which is right now at around 320 or something, would head to around 450. So I think that the next 3 to 4 years, you could have about 37-38% return in the global space. You will have good months, good years, bad years. But essentially, the trend in global markets is up. So if you have the tailwinds behind you, you have a global equity market run that is happening, I think you're on a firmer wicket and you feel more confident playing ahead.
If there is one trend which across the globe, which gives you that conviction that this rally is here to stay, is going to stay not just for the next few months, but the next year, 2 years, 3 years, and so forth, which is that one chart that you think that this is it?
Apart from a chart, it's, being in the markets for so many years, you also look at human beings, human behavior, having seen bulls and bear markets. What I realize is that low walls of worries are very important, which is there right now. You go onto any channel, any sort of blog, you will find that people are in immense pain. Everyone is calling the top. Everyone feels like, this is it.
A correction is coming.
A correction is coming. And that is the beauty. The moment all walls of worries vanish, the moment everyone becomes optimistic, the moment everyone is what you call all in, even when leverage comes to the system, that is when tops happen. But at the moment, I guess even mentally people are not all in, leave alone financially and leave alone leverage. Absolutely. So that is what gives me, as I said, you will have corrections. But the fact is that the primary trend for global markets, and that is why for India, I feel is going to be up. And we will have a good 3 to 4 year kind of move from here on, point to point.
So let's talk about India now, closer home.
Yes.
What's the trend indicating? 10,200 now. What are we staring at next Diwali?
So this was 2008. We had a 60-300 or so on the Nifty. So first and foremost, India is an early breakout.
Okay.
Stocks that break out early are essentially leaders of any rally. So the global index.
This is the Nifty chart, right?
This is the Nifty chart. So the global index is broken out early 2017. But India broke out in 2014. So essentially one of the early breakouts in the world markets has been India. So that is a quality of a leader. Number two is if you look at the emerging market space, which we are a subset of, you will find that those markets have just got into the act. One of the concerns with India is, oh, the FIs are selling. So how sustainable is it? We always think that the FIs do the right thing. That may not be the case. Essentially, I find when I speak to my friends in the mutual fund industry or FIs and things like that, their main concern is that, well, sort of valuations are expensive
Earnings
or growth,
niare.
earnings niare and things like that. And I think that it's not just that. What is more important is that they have alternatives today. Countries like Brazil, China, Russia, due to the whole commodity rise, have suddenly stocks that were countries that were beaten down are looking more attractive.
But Atul, you're also saying that we're already 3 years into that breakout, right? So is the case then for fading out earlier also possible?
I think that we may sort of see certain FI flows that are moving out. This is opportunistic money. But the moment we start seeing slight green shoots of revival, think that for every 5,000 crore buy figure or DIs, if you also have a 5,000 crore buy of FIs, then what will happen to the market? And I do think that will happen. I do think that will happen. The money that is flowing out in the last few months in FIs is more opportunistic money. Essentially, very often how people book profits in a stock and move to a stock that has not moved. That is the kind of mindset that is happening right now. But if we see certain revival, a certain green shoots in the Indian economy, I think you will see a double barrel gull action. And FI money may come and go. It is, as I said, very opportunistic. But the DIF flows, which is coming through the SIP route, is very, very essential. The quality, it is a paradigm shift that is happening. Firstly, there is no option for Indian investors, what I call the TINA factor. Because your alternative asset classes are giving you, 4-5% returns. Here, people who have done SIPs in the last 3, 4, 5 years are handsomely rewarded. Psychologically, if I have gone and put a 10,000 SIP, right, and next year if I get a 5,000 rupee increment, will I go and put it in a 5% FD, or am I likely to increase my SIP? So I think that even the SIP allocation by Indian investors...
It's a blind call right now.
I think nothing is blind, but the fact is that you will see
you're
incremental...
You're better off investing than in gold or real estate.
That's right.
Or FDs.
So you will see more incremental flows coming in, unless until you have a massive crash or a total destabilizing. I think this is going to be the backbone of our market. And ultimately, our bull market in India is going to be led by domestic money and not FI flows. FI flows are opportunistic. Indian flows are going to be more committed and more long-term. And that is what gives me optimism. So my target for the Nifty is about 17,000, about 4 years. So that is about 68 or 67% kind of return. And it will be a good compounding market.
Say that again, 17,000?
17,000 by 2021.
Okay.
And the beauty in India is that it's such a wide market that if you get into the right stocks, you can get many-fold more returns. The important thing is, as I said, the tailwinds, the global markets are behind you. We are in a good subset, the emerging markets, and India has money coming from the right places. As I said, I am a great, great believer that the long-term bull market in India will be led by domestic money. And after many years, you are seeing that. I have no doubts. I see the whole asset management industry, the whole market really broadening. And we are going through a total tipping point as far as equities in India go. And that is what gives me confidence about India.
But suffice to say, it's like the ECG monitor, right? A flat line means you're dead. So it's not going to be just a one-way move up. The market will test us. The market will have the volatile bouts.
Sure.
So within this bull trend, do you sense that there could be sharp 10-15% corrections within a very short period of time?
It is possible. As I said, you cannot rule that out. But at the end of the day, I think for the many years to come, it will be a buy on dips market. At the moment, the skepticism is so low, it's so high, that people are always waiting for this, perfect copybook dip, which I don't think will come. But as and when the corrections will come, you will have that. You will have losing years. You will have losing months. But the fact is that on the 3 to 4 year time frame, I think it's a buy on dips market.
Okay, very quickly, there are patient people here, or rather impatient people here with their questions. The one trend you think that one can bet on from this somewhat to next?
So I won't be talking on stocks, but a sector that I find very, very interesting in metals. People feel metals have already moved. But if you look at the metal chart, this was a 2008 top. And it's been an absolute laggard for many years. This along with PSU banks and maybe even real estate has been an absolute laggard. What you find here in technical terms is almost what you call a double bottom creation, right? And this has really broken out, can you see from this point? So though metal stocks have moved up, I find that the breakout has just happened And you can really see this thing retrace and almost get back to around its 2008
But
tops.
Atul, not all metal stocks have moved up. If you pick up a Tata Steel or a Vedanta, yes, you've made money.
Sure,
but if
sure.
you've been in the sales, etc. of the world, you've not made money.
So the leaders tend to move, or the better companies tend to
So
move
stick
earlier.
with the leaders is what you're saying?
I would think so. And my basis for optimism in metal comes not just looking at this chart, but if you look at global commodity prices, you look at copper, you look at zinc, aluminium, I'm saying global commodities listed overseas, LME or whatever, CME, you find that they all are in a beautiful chart patterns. You look at the ETFs that are there, you have a lot of metal ETFs which you can track, and you will find better looking charts in this. You go one step ahead and look at the metal companies, Rio Tinto and things like that, you will find that even there you're seeing beautiful gains. So all in all, this creates a very good picture for the next 1 year of a big move in metals. And at the end of the day, we have a few top stocks. It's good to get into a basket. One day this one's going to have its day, second day the other metal is going to have its day. But if you are in a basket of metals, I think for the year ahead, you are sectorially in a nice sort of
Place to be in.
Just a disclaimer that I have a vested interest. I run a PMS, so I would be having holding in the thoughts and stocks that I've mentioned in.
Absolutely.
So I think that this could be a theme for the coming year.
Okay.
And it's under-owned. You look at any mutual fund portfolios, you look at any HNI portfolio, you will not find metal stocks
Yeah,
among
they're
the
still
top.
busy with banks. Absolutely.
So-
Okay, let's quickly take some viewer questions. And I know Kunal Bothra has been waiting for a long, long time. Maybe we can have the mic to him.
Hi, thank you so much for that, Atul. One of the most important part for this market is that we are riding on a very low volatility market.
Right.
So it's across the globe
Sure,
that the volatility
sure,
is very low.
sure.
Historically, when I studied volatility, there is a period of bull market where after a period of sustained low volatility, the markets rise and the volatility also increases
Right,
significantly.
right.
Do we see something of that scenario spanning out in the next 1-2 years?
I do think so, because we are in a slumber state, Kunal. If you look at it, as I like to use this term at a very cliched, if spring is here, winter is not far behind. And that is the nature of market. That is cyclicals. And that is there going to happen in our market. We are going through a dream low volatility market. VIX, US VIX is in single digit. When did we last see it? It's, I think, a 10, 20-year low. So this really tells you that the markets are not appreciating volatility. And what follows periods of complacency is the other way around. So I do think you will see moments of volatility that will definitely come, and it will show in the way VIX will spike. But the important thing is that, Kunal, the bigger story, the bigger picture, the bigger trend, and your ability to ride it, which is going to make money. Sometimes you'll have good days, like nowadays, you wake up in the morning, you see the Dow up 30, 40, 50 points, you put down your phone, you're not bothered, you're chilled out, right? And one day you will see the Dow down 200 points, and like suddenly you'll jump out of bed, forget your morning tea, and you'll be rushing to office. So those days will also come. And that is the nature of markets. As I said, if spring is here, winter is not far behind. But I do think you will see that. But as an investor, as a long-term trend follower, my thesis or my thought process is to be in the longer-term trends and be in stocks which will outperform these indexes by miles.
Okay.
And there are a lot of opportunities.
Okay, we're completely running out of time.
Sorry.
A quick question, and then we'll close in the session.
Hi, sir. My name is Neelu. I would like to ask you that do you think there are any risks that we should keep in mind?
Of course, all the time. All the time.
Major risks that you could think of?
I think one big chart risk that I see is oil. If you look, India as an economy is very, very dependent on. I'll just rush you through a chart. Yeah, this is the Brent chart. One of the big importers, biggest importers for India has been crude, apart from defense. And when crude spikes, you know that Indian macros can get affected. So I think that if you look at crude, this band of 58 to 60 is very important. You're seeing a commodity revival world over among metals and base metals. But crude has been relatively a laggard. But if crude moves beyond 58 to 60, I do think that you will start having issues. As I said, the markets may do their bit, but you will start having problems with Indian macros. And why I think that will be important is because you will have higher inflation. And this whole thesis that we have, that whole interest rates in India will remain flat or in fact go lower, may not hold on for too long. So I think the big risk for me is going to be crude beyond 60, because then I feel that you have a pattern forming and this thing could spike and, to some extent spoil the shorter term party. So for me, the biggest risk is a spike in crude.
Okay, Atul Suri, always a pleasure having you on the
Thanks for
show.
having
Happy
me.
Diwali from all of us once again.
Thank you.
And thank you guys for tuning in for this very special, Diwali special, that is ET Now Masterclass.